The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, The Market, digesting a jobs number, 73,000 jobs. Let's kick it off with the headline, folks. Friday, Jobs Friday for July, 73,000 jobs added. Jobs numbers from May and June revised down sharply. July's figure falls short of expectations. The pressure mounts on Chairman Powell to cut, but guess what? All expectations, we were already supposed to go to 4.2, and we're at 4.2. But you look at that job chart. Tough to make the case that there's not some slowing when you look at where we are. Federal government layoffs continued to drag on payrolls. The sector lost 12,000 jobs. Now, hiring in May and June, was much weaker than previously reported. This is the story, man. Revision showed employers added a combined 258,000 fewer jobs in those months than previously estimated. Say what? Yeah. 258,000 fewer jobs. We're still sitting at 4.2%, but the pressure is going to be on for the Chairman Powell and the Federal Open Market Committee to cut. And yeah, the Fed will have 2 months worth of inflation data before that September decision. And the other disclaimer is a 4.2% unemployment rate is not extraordinarily high. Keep that one in focus. But hey, you're talking about only 73,000 jobs added, okay? And you're talking about revisions to the prior months. And we zoom in on your 8:30 volatility. You come into that number just a bit higher. You dip slightly. All things considered, the market taking it in stride right now. We're within about 5 to 10 points of where you were coming into that number. Okay, markets were already taking it on the chin with tariffs. We got a lot to talk about this morning. Tariffs with Amazon trading lower as well. And so we were already in the red. Okay, and you jump over to the Dow, off by 400. Let's take a look at the price and volume on this market, man. I was doing the afternoon program yesterday, folks. I was saying, man, that's a big daily volume bar, and we're going to get some volume on a weekly, and you better believe we're going to get it now, man. Okay? Check out this weekly bar, folks. Okay? This is a weekly bar on the S&Ps. I had to check myself for a second. You're taking apart everything we did the prior week, and you are going to blow it away with volume. That's the big part of this, okay? The price spread, yeah, you're talking about 160 points from the highs. We're going to have quite a red candle here. And if you ever get below, like, 62.23, if you could take out all of this, right? If you could take out all of July, imagine that. You take out all of July in the last few trading days, and that's what you could set up. We're only about 80 points from there. We're going to get some volatility in open. Pressure right now to the downside, but you are going to get some volume, man. We're doing 6 million contracts already, folks, and we haven't even started trading in what could be the biggest volume trading day of the week when you think about digesting what we have going on with Amazon, Apple, tariffs, and Jobs Friday coming at you. So we're going to blow it apart. We're going to do more than 6.7 million. You're going to do more volume potentially since the week of April 7th. Okay, on the S&P contracts, yesterday you did 1.7 million contracts. We've been averaging about a million, hit or miss. And if you add a million, you're at 7 million. All you got to get above is 7.01, and that's going to be the most volume on a weekly basis since the acceleration from lower price. Pay attention to this one, folks. Okay, you got volume right now. You're going to have wide price spread, and it looks like these candles are going to encapsulate the last month of trading right now with volume on the S&Ps. You take a look at the NASDAQ 100. Not quite to the same degree. You don't have the volume on this one right now. Let's take a look at the Qs even. All right, on a weekly basis, you're just not there as much. I mean, you're going to have Microsoft and Meta helping out the Qs even though you gave it up, so not to the same degree, right? S&P's looking weak compared to the NASDAQ right now. S&P's off by 1%, NASDAQ 100 off by 1.2, but you put that on a weekly, right? Amazon weighing on that heavily. Let's jump over to yields. And that's a spike for you, man. You talk about pressure, okay? Yeah, you talk about pressure, man. How about a full point? How about a full point on the 10-year right now? We get the 10-year at 4.26. Okay, we take a look at the daily. And yeah, you're making a run for the highs of July. And at that time, we were at 4.19, folks. You were at 4.19. You jump over to the dollar, and we take out a full point just like that as well. We're pushing 100. We're hovering around 99 right now. And you jump over to the gold contract, and yeah, and you better believe that's going to help gold, man. Gold up by $52, up by 1.6% right now. There's a pop for you, man, as the market reacts to that jobs number. Yeah, pretty amazing on the revisions, right? 258,000 jobs revised. So the pressure's on, man. We're still going to get 2 months of inflation data, okay? And that's what's going to be in focus right now. If you listen to Chairman Powell when he talked Wednesday, folks, he repeatedly talked about two mandates, right? Full employment and price stability. Those are their mandates. They want full employment and price stability. He thinks this economy is at full employment. Now, you can make the case with these numbers, 258,000, right? But he's looking at 4.2% unemployment, folks. Okay, at 4.2% unemployment, that's pretty darn close. So the inflation data is going to matter. The market's not paying attention to that right now. The market's saying, man, you get one more print like this, we're going to be celebrating 50 basis points. Quite a move. You jump over to the 2-year right now. And yeah, that is a rip-roaring rally on the 2-year right now. And the 2-year, most focused on the Fed. And we jump around to the curve right now. The 10-year, as I mentioned, at 4.26, you're down by 10 basis points. But check out the 2-year, man. The 2-year has almost priced in a full cut in the last half hour, folks. You're down by 18 basis points on the 2-year. The market's taking that number and running with it, man. Man. And you look at those numbers, man. The June total. Yeah. So June goes from 100. Check this out, right? This is just a CNBC article talking about it, but the revisions, my goodness, man. Yeah, and check out that chart, man. All right, we're going to come right back, folks. The June total, man, we're talking about both of them. We'll be right back, folks. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. And boy, you got this curve. And yeah, on the shorter time frame, one of the takes here, jumping around, of course, to some of the hot takes you got this morning, but this one stuck out, talking about, yes, I liked this comment, the bullish mood. And this is talking about the bullish mood in short-term fixed income, okay? Michael Collins, fixed income portfolio advisor at PGIM, who tells Bloomberg TV, and I think he's right, man, this short-term curve, and, you missed the move this morning, but it doesn't mean that it's over. As you've seen today, the 2, 5, 7, 10-year short to intermediate part of the curve comes crashing down, and that is where you get the most bang for the buck. You don't have to take a lot of interest rate risk to get a lot of benefit. You go out further on that curve, you're taking a lot of risk. But, man, the 2-year, I haven't seen a move like that on the 2-year in a long time, man. And, yeah, talking about the revisions, folks, okay? So you get 73,000 jobs added for the month of July. That obviously can be revised, as we see, okay? The June total comes in at 14,000. That was previously 147,000. May comes in at 19,000. That was previously 125,000. So your last 3 months are now 19, 14, and 73. Your last 3 months basically encapsulate what was expected this month alone. And you lose 258,000, right? The 3-month average, okay, is now 35,000 jobs added. The prior was 150,000 jobs. Now, unemployment is going to be in focus, okay? One of the things that was interesting about Chairman Powell's conversation yesterday, Wednesday, when he was talking about on a press conference, I should say, is that their mandate is not to add hundreds of thousands of jobs. It's to be at full employment. And you're seeing some productivity gains in this market we're reaching a level where we are at full employment right now. Okay, people are not getting laid off. They might not be getting hired. It's part of the equation there. The unemployment rate is going to be a big number, and the inflation number is going to be a big number as well. But you better believe if this number persists, and we're adding now 35,000 jobs a month, that's going to be a problem. And the unemployment rate is going to go up. Period. Yeah. And yeah, he said the unemployment rate is the main number to watch. That's what he's worried about. Now, it just went up, okay? It was expected to go up to 4.2%, though, folks. Imagine that. Even with 258,000 jobs less on the revisions, the unemployment rate's 4.2, and that's where the market thought it was going to be, okay? Now, the immigration part of things is interesting. The foreign-born workforce declined by 506,000 last month. It's down by 1.7 million since March. So you have a shrinking immigrant workforce and the workforce overall. That's 1.7 million, okay? That could exacerbate labor shortages, affect wages. That's noisy data, but keep an eye on it, okay? Because what's that going to do? You're taking people out of the workforce, right? And what is that doing? That's keeping the unemployment rate low, no matter what. 1.7 million people out of the workforce. Yeah, that's quite a number, man. Yeah, those revisions. My goodness. Okay, let's jump around to what else we got going on. We got tariff news. It's April 1st, folks. Tariffs kicking in. And yeah, we kick things off. Trump tariff blitz unleashes delayed shock. Well, I don't know why it's delayed, man. We're talking about a 15% average. Yeah, that is quite a number, man. The stiffest level since the 1930s, 6 times higher than they were a year ago. Okay. The latest volley from President Trump outlined a minimum 10% baseline, 15% or more for countries with trade surpluses. And then you have other countries in there in the mix as well. New reciprocal tariff rates here, 35% plus on some areas. And then getting down a little bit further. And this is the average U.S. levy. And you can see that as things have crept up again, right? As in you pull back, you're at 12.6. You ratchet up. We're making deals. The pressure's on. We're now at 15.2% average U.S. tariff rate. And we'll see if it be seen to be seen. All right, let's talk a little bit of Amazon. So, in the cloud. Yeah, Amazon might have a little problem here. All right, I love Amazon long term. You're going to be down $16 on the open, though. Okay? They had some strong numbers. You beat on revenue. We're going to open at about 218. So we're back to taking out the entire, basically, month of July. We're back to the highs of June. Early June. Okay? And their numbers, when you look at the Azure cloud, they got a problem. And it'd be one thing if this was like Oracle Cloud Infrastructure that had a tiny number. No, you're talking about Azure, man, pushing 40% growth. Okay? 40% growth on Azure at a number that's $75 billion. And you're talking about Amazon's at 17.5%. And look at the dip. Okay? Since the fourth quarter of 2024. And listen, I've been out here being the biggest champion of Amazon. This is a problem, man. Doesn't mean that they can't correct it in the next couple quarters, but this is a problem. Get some exposure to Microsoft if you're just in Amazon, folks, because Microsoft is eating Amazon's lunch right now. You go back to the fourth quarter of 2024, Microsoft was growing at 31%, Amazon was growing at 19%. Next quarter, Microsoft's at 33%, Amazon's at 17%. Next quarter, Microsoft's at 39%, Amazon's at 17%. There was growth in the cloud services sector greater than analysts were expecting this quarter, and Amazon did not participate in that growth. They spent $31.4 billion on CapEx, but that's the market reaction, folks. That chart right there. Okay, that's all you got to know about why Amazon's down that much. Now, it's big numbers, okay? But everybody else blew it away. Amazon Web Services came in just above expectations. Everybody else blew it away, though. That's it. Google Cloud revenue rose 32%, right? Azure was at 39%. And AWS at 17%. It's not going to take many years, if not a year, for Microsoft to be catching Amazon at a growth rate that is that significant. They got a wide range of operating income for Q3. Total operating expenses, $148 billion. Operating profit in the 90 days, $19.2 billion. The estimate was 17. So they're going to be okay, folks. Revenue jumped 13% to $167.7 billion. Amazon spent a record $31.4 billion in 90 days. They're spending $1 billion every 3 days on CapEx. They got a wide range of operating profit, though. That's what the market was a little worried about. Their operating profit range, 15.5 to 20.5. The market was looking for basically the high end. Sales, though, they're going to crush it. Like usual, Amazon focused on the top line. They'll figure out how to take it to the bottom. Markets in the red. We're coming back for the open, folks.
Is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Welcome back, folks. You got markets open. You got an S&P down by 67 points right now. Sorry, folks. Got caught up there for one moment. You have the S&Ps. We opened down 66 points, so we digest. We have Amazon earnings dramatically lower. We'll get into that. You have the S&Ps off by 70. We're digesting tariffs, and we are digesting a very, very weak jobs number this morning. Keeping in mind unemployment's at 4.2%. Okay, 4.2% is not hysteria. But boy, that revision. Chairman Powell this morning It's a tough one. Look at that move in yields, man. The 10-year right now is up almost a full. We're up more than a point from where we were. We're up by 28 ticks on the session, but you came into that jobs number at 110.27, and right now you are pushing 111.30, and we're at 4.25%, just like that. And the move on the 2-year, the biggest one. ZT is the futures there, and yeah, that's not stopping either. The 2-year right now is up down. We are lower in yield, right? The 2-year is down almost 20 basis points. We're down 19 basis points to 3.75 on the 2-year. 3.75 on the 2-year as the market. We're approaching the lows, selling off right now up. I got to get out of my head, right? Got to recalibrate this market. Down by 75 points. The NASDAQ 100 down by 280. Let's check in. Amazon shares down by 6.7% or $15 lower. You jump over to Apple shares on the flip side, higher by 2.6% this morning. Google catches a little lift on the open, only down by 0.7% right now. You jump over to Microsoft and Meta, big winners yesterday. Look how well they're holding up. Microsoft only down by 0.1% right now. Meta was up 12% yesterday. They give it back slightly, off by 1.4. Nvidia gives it back slightly, down by 2.2%. Some of the chip stocks, AMD, all right. Look at AMD down 3-point-something%. Oracle down 3-point-something%. Dell down 3-point-something%. Okay. Yeah, we're getting a little slide right now. And we got to VIX it, Nick. So much for a 14 handle, folks. Ooh. Fear spiking in this market. All right, let's talk a little bit of oil. Exxon, Chevron, yeah, they beat it all. Record oil production. You talk about it, man. Chevron, so Exxon pumped more oil than it has in any second quarter since the historic Mobil takeover 25 years ago. Chevron lifted output to an all-time high of almost 4 million barrels a day. And yeah, both of those companies higher. Oh, okay, watch out. Let's see. Yeah, no real huge. All right. Well, the market's reacting, folks. Look at that. Even on those types of numbers, right? You get a conference call, but that was on the open, man. Exxon actually trades to lower price on the open. Chevron, different story. You're up by 1.7% as the market cannot find a bid right now, folks. Let's jump around some retail. All right, there's a little safety for you. You know, you're looking for safety on days like today, man. There's what you want to see, right? Market's falling apart. NASDAQ's off 330 points. S&P's off 79. Walmart's flat. You got actually a bid. Flight to safety on Walmart shares. Apple holding on to the gains right now, up by 2.2%. Remember, you're facing a lot of pressure on the market right now outside of earnings. So Apple would be up even more if the S&Ps weren't down tremendously right now. Apple holding up well at 212 right now. We'll get into their numbers a little bit later in the program as well. But yeah, the focus today is going to be on jobs, folks. It's not stopping. Look, I can't help but keep checking yields, man. We just got a 112 level. Whew. Yeah, as you got the 10-year below 4.25% right now, and you do have the 2-year down 20 basis points. Market's going to price everything in right now. Man, there's so much volatility in these markets, folks. You know, you talk about yields. The market's making a decision today that is a remarkable weakness number. And you jump over to where the market's pricing cuts right now. Okay, yesterday the market was thinking a 60% chance, almost a 2-to-1 that we get no cut. These are the odds for the September meeting, folks. Now the market thinks there's a 3-to-1 probability that we get a cut. Why hasn't it priced in 2? Now, these are not the holy grail, I always say, folks, but it is a guide of where the market sentiment is. And market sentiment is saying, hey, Powell's not going to have a chance come September with these job numbers. We have inflation data, all right? The jobs data, unless we get some 200, 300, 400,000, okay, on a 3-month average, which the chairman they love averages, right? Because there's noise on a 30-day basis. You love averages, 3-month, 6-month, right? Tell me where we are on a 3-month, 6-month average basis. Smooth out some of the variance there. That 3-month jobs number is horrible. Now we shift to inflation, but you can see. Now we're going to get inflation numbers, but today the market's deciding. We are getting a cut in September, 3-to-1 probability. You go out to December, and the market thinks we're going to get 2 to 3 cuts again. Now, here's what I'll say about this. The odds that we get cut, okay, if we get cut, which the market thinks there's going to be a 33% chance that you get 3 cuts by December. We only have 3 meetings left, folks. September 17th, October 29th, and December 10th. The market thinks there's an 80% chance that we're going to get 2 or 3 cuts. You get 3 cuts, this market's going to be in trouble, folks. Because if they have to go cut, the market's going to be very freaked out that they're very late to the party. And the reason why they'd be going cut is because they're late to the party and the economy has weakened to the degree that they now come in and try and save them, the economy. What you want is the Fed to come in early, right? The inflation data is going to be important, to put it lightly. All right, so pressure's on the Fed already. And what's amazing was these articles were already up prior to 8:30. This one was up at 6:30 this morning and talking about the Fed board to assume control if rates are not cut. Well, yeah, I mean, it's anyway. Out there calling him a moron. No, he shouldn't be out there calling him a moron, folks. I don't know how that type of, behavior from the president is just condoned, celebrated. And it becomes the norm in terms of verbal, personal attacks, calling him a moron. It's very unfortunate. And there's a lot at stake, but the pressure's going to be on more so today than ever. And we got markets reacting with the S&Ps off by 82. You check back in on Amazon. A little bit of a lift here. Okay. But Amazon's got a problem on AWS, man. 17%, they got to jack that number up. If it was just Microsoft, I'd say, maybe they crushed it in a way that they had a couple big quarters, got a couple big customers, and they might not experience that type of 39% growth, but they're putting numbers out in the future that are pretty close. Okay, the one thing I will say that was on Amazon is that there was a line in here that their spending, okay, let me pull it back up, is representative. Yeah, here it is. Okay, now the other companies said that things are going to accelerate. Meta said theirs is going to accelerate. But Amazon, their spending is representative of what's going to happen in the future. So maybe not as much spending. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks, and we got markets accelerating, and this is telling you right now that guess what, folks? Bad news is bad news, okay? Many times in this market when we were rate sensitive, okay, when the market was waiting to see where the Federal Reserve, Chairman Powell, were going to go, whether it was hikes, originally, bad news could be good news could be bad news. We're at the level right now that this market's saying, hold on a second. You're telling me we're only adding 35,000 jobs a month right now for the last 90 days? That's bad news, and that's bad news for the market. I mean, I saw a report yesterday. I think somebody posted it in the Tiger's Den. Maybe I saw it online. We are at record margin. Let's see if I can find that one level. Is that in the Den I saw that or somewhere else? Because that was a big one, man. Yeah. Margin debt hits a new record. Let me see if I can find it. There's a couple articles popping up. As in, you are coiled right now to max leverage at all-time highs. Yeah, I can find that one. Is this the one I was looking at? All right, we'll pull that up in the next break. You get the VIX spiking above 20 right now. And yields aren't going to help this market is what I'm seeing, man. Like I said, this is going to be a rip-roaring weekly volume bar, man. We're looking to take out the entire month of July and come back and test the highs of the beginning of the year all in the span of 2 days, folks. Stairs on the way up, elevator on the way down. We're coming into the week of June 23rd. And yeah, you get down to a price point of about 6,200 in this market right now. We've already done 6.15 million contracts. And folks, here's what I'll say, okay? If you're short-term trading this market and you've had a heck of a run in any equities and you're thinking about at any point in time taking some off the table, taking some profits, okay? It doesn't matter what you're in, man. You're in NVIDIA, all right? NVIDIA just dropped $12 from its highs, folks. That's $250 billion in market cap. Oracle, some of the highest flyers out there. These are going to be great equities long term, okay? If you've made the decision to invest in some of these, if you're in the market long term, you'll be fine. You're in the market short term right now, pay attention to what's happening, okay? You're swing trading this market, whatever you're doing. This could just be the beginning of a real pullback right now. And this run, you know, we're going to get some B points in this market from our man Basil Chapman coming up next, folks, because we are finally getting a pullback, okay? But a 382 pullback, folks, brings you 400 plus points below where we're at right now, and that's kind of my point. Okay, put a line in the sand, put it in the sand right now and pick a price, because if you're short-term trading this market, there's nothing to get in the way of this thing just trading back to the lows of May. That's a rip-roaring market right now, folks.
All right, Amazon shares down about $15 right now. So Apple shares. Ooh, okay. Apple cannot hold on. We got the market selling off. Apple selling off with it. Let's talk a little bit of Apple. Big numbers for Apple, man. iPhone growth. Absolutely amazing that they're able to grow this iPhone growth when really the iPhone launch has not been that amazing. Imagine when they have the iPhone launch where every content creator on TikTok is saying, oh my goodness, the iPhone 17 changes the game when it comes to AI. There's nothing like that, okay? And I'm not saying the 17 is going to get there, but if they can ever get, that next revolution of the iPhone, what is going to happen then? Because the iPhone revenue, folks, just came in. Let me get the number. It's $44.6 billion in iPhone sales. The market was only looking for 40.1. Absolutely amazing that they're able to sell that many iPhones. I was just looking at the fact, folks. I have an iPhone 12 Plus. I'm so proud of this thing. I've had it for 5 years. I've had this phone for 5 years. There is absolutely no need to be updating on a yearly basis on your iPhone. If you enjoy, the luxuries of the new phone, right? You trade in the old phone. I get it. We spend so much time on our phone on a daily basis. I get it. But I always think about that saying, man, how are they going to get us to upgrade the phones every single year? They get a lot of people to do it, and they beat on a big number on revenue, man. And part of that was that they came out with a new low-end model, the 16E. The low end for iPhones are now $600. The previous low end was $429. That's a big part of it. And they're still selling sales. They might not be selling as many, but guess what? Percentage-wise, they're selling phones at what? Almost a 50% markup. The phone was almost $400. Now it's $600. They jacked it 50%. Not quite, but you get the point, right? Services revenue rising 13% to $27.4 billion. They did not provide guidance for the segment, citing uncertainty from several factors. Now, the market was looking for 26.8. I wonder if one of those factors is losing the battle with Epic that Google lost, in terms of how that is going to even play into the whole ecosystem that runs wild. They already have issues. There's several factors, and yeah, they've had to relinquish control. Yeah, wearables and iPads, crazy. So the iPad is generational, right? And the iPad generates $6.58 billion in revenue, down 8.1%. The market was looking for $7.1 billion. This is a blip on the radar for this company in terms of what they're doing, right? But the wearable segment is at $7.4 billion. Now that's down 8.6%. So you have iPads going down 8.1. You have wearables down 8.6. Okay, both of those missing expectations. The only highlight there was the iPhone. And yes, that's their flagship model. But that's a problem when the other areas are having some problems here. Services are a big one. The market likes it. They beat in dramatic fashion. You got Apple. They were higher. But on a day where you have the S&Ps down almost 2% right now, not bad, taking just a 2% decline. And look at Amazon, man, okay? That's strong, folks. And yes, I'm an Amazon bull on a longer-term basis, but you better believe that's strong, okay? They're down by 6%, but the S&Ps are down by 2%. NASDAQ 100 is down more than 2%. Okay, as you've had the market deteriorate here, pay attention to where people are going for safety. Walmart. Microsoft. Meta's participating down 2.4%. That's a tough one to gauge when you're following a day where you're up by 12%. And Amazon actually gets a lift on the open. And you know what Jazzy's saying here, okay? It's his job to be the ultimate PR person. Take that for what it is, right? You know who the messenger is, okay? And the messenger is the man making the most amount of money besides the owner running this company with the incentive to tell you everything is perfect. When they talked about the cloud, okay, when Jazzy was pressed by analysts on why AWS was not growing as fast as the rivals, he's just making the case that it's in the early days. Now, that's a dicey one because that's, hey, give me some more time. Don't pay attention to the current numbers, okay? But we'll talk about this when we get back because he's saying that the advantages they have in security, right, the problems Microsoft is having, they don't have those problems. And they're going to have the ability, okay, to lower the costs as the leader
and they're still trying to build it out, and they need electricity to do so. So they still have a supply problem, not a demand problem. We're coming right back, folks. Stay tuned. Markets in the red.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&Ps right near session lows right now. We're off by 1.8%. NASDAQ 100 off by 2.2% right now. The Dow is off 700 points or 1.6%. And how about the Russell? Off by 2.8% or 62 points lower. Bitcoin trading lower. Off 2.5%. 114,000 for Bitcoin right now. You jump back to the 10-year. Yeah, just flirting with almost 112 right now. You got the 10-year at about 4.25%. You jump over to the 2-year. Yeah, rip-roaring move right now for the 2-year as well. Higher price, lower yield. And on that lower yield, you get dollar weakness at 98.93. We were basically trading at over 100, and now you're trading at 99 on that dollar. And on a weaker dollar, you got gold catching a bid up by $46, and we check back in. Amazon shares off by 6.7% on their numbers. Apple as high as 217, came into the open near about 212. We're trading at 207 for Apple shares right now. Google's off by 1.4% right now. And you jump over to the 2 oil companies out with their numbers. Chevron, positive by 1%. And ExxonMobil was higher. They give it up on the open. Look at Walmart. You want some safety, man. Pay attention. Okay, if you're worried about this market, maybe a little bit of rotation, right? You're worried about all those gains in some of those tech companies, folks? Look at Walmart. NVIDIA down by 2.9%. Yeah, some of these growth companies, man. Oracle down by 4%. Look at that one. And AMD shares down by 4.4%. Oof, Robinhood, yeah. Everything's exacerbated. Robinhood down by 8.3%. Palantir down by 4%. All right, folks, it's going to be a wild Friday, baby. Stay tuned. We got our man Basil Chapman. He's ready. He's in the Tiger's Den. He's getting ready for the Tiger Technicians Hour coming up next, folks. We got our man Steve Rhodes with the Trader's Edge. Fast Market at 12. Larry Pesavento. He's coming up live at 1 o'clock. And then I'll be back from 3 till 4, folks. Where's this market going to be by the time I see you in 5 hours from right now? Stay tuned, folks. Basil's coming up next. Have a great Friday, and we'll see you at 3 o'clock. Thanks, folks.